Ken Forrester, Executive Director at Momenta. Welcome to our Digital Thread podcast, produced by, for, and about digital industry leaders. In this series of conversations, we capture insights from the best and brightest minds in digital industry. They're executives, entrepreneurs, advisors, and other thought leaders. What they have in common is, like our team at Momenta, they are deep industry operators. We hope you find these podcasts informative, and as always, we welcome your comments and suggestions. Good day and welcome to episode 236 of our Momenta Industrial Impact Podcast. Today, we're pleased to host Alexandre Préfontaine, principal at BDC's Industrial Innovation Venture Fund. Alexandre has been with BDC Capital since 2017, where he plays an active role in articulating the fund's investment thesis, executing on investments from sourcing to negotiation, and working on value creation with portfolio companies, all while helping the key BDC initiatives and partnerships. Alexandre has built a strong reputation in the Canadian technology scene through his engagement on the board of 7 of his portfolio companies and is a member of the Creative Destruction Labs community and by his lectures on venture capital at local universities. Before joining BDC, he started his career in the financial sector with TD Canada Trust. Alexandre holds a master's degree in financial economics from HEC Montreal and a bachelor's degree in commerce from the University of Ottawa. He's also the proud father of his 5-month daughter, an active ice hockey player, and a fly fishing enthusiast. Alexandre, welcome to our Industrial Impact Podcast today.
Hi, Ken. It's a pleasure to be here. Thanks for having me. We had a great conversation when we met for the first time at Hanover Mess back in April, and I'm quite pleased to extend the conversation this morning on the podcast.
As well. Plus, I think we have been co-investors, or at least in the same domain, investing in some of the same general companies for quite a while, and you guys have a great reputation in the industry. So it's long overdue for us to finally connect. So, I always like to start off with this question of the digital thread. So really to understand your own defining interests and experiences that brought you to this point in life. So what would you consider to be your digital thread?
Very interesting question, Ken. I had to reflect a bit upon it because, life is a collection of opportunities, and sometimes even the best planners don't end up when they think they would. So I'll reply as such. The assessment of venture opportunities really requires a holistic approach. Beyond financial consideration, you must evaluate market dynamic, psychology of founders, which is quite important, uniqueness of the technology, and multiple other factors. To be successful, you need to build strong networks and social bonds that enable deal sourcing. So all of this requires a bit of a specific skill set, and I believe it's best executed as a team so that the collective experience improves decision-making and eliminate blind spot as best as we can, of course. It's also very much fun to live 5 years in the future. So all that to say, I took a course on the topic during my master's, and I never really looked back.
Well, excellent. It sounds like you were destined for this space one way or another, or at least created your own destiny in that regard. So yeah, VC can certainly be a fun profile and role to have. So tell us, who is BDC Capital?
BDC Capital is the investment arm of the Business Development Bank of Canada. We are collectively the most active and largest investor north of the border here in Canada. That's 6 billion of asset under management. We're an active limited partner to a plethora of local GP franchises here, 70 franchise, over 150 funds. It's a practice that's grown a lot in the last decade or so, and it allows BDC to have a fantastic outreach regionally through many sectors, tap in on our network's expertise. But we also have 7 teams in-house that invest directly. We've built a portfolio of around 300 startups to date, and the number changed consistently. So you'll have to excuse me for the detail here. But long story short, we've launched programs to tackle the big problems of our time in recent year, whether it's sustainability, climate, diversity, always tackling it through a technology lens. And yeah, it's about 120 people from coast to coast. So that's BDC Capital for you, Ken.
Well, it's quite an extensive presence that you have. And I know you are an LP behind one of our peer funds, McRock, who has made a lot of good investments in this space as well. So, great to have you guys supporting them in the industry. So relative to venture investments, can you give us an idea of BDC's, really their focus and scope, stage, geography, check size, et cetera?
BDC has a development mandate. So there for the institution, coverage is an important consideration. So through our various teams, we strive to cover the full spectrum, Ken. So we have recently launched a seed fund, which is sector agnostic. We also have a late stage group, which is mostly active through co-investment transactions that emerge from our network of sponsored GPs. So those are really the two ends of the spectrum. And for the early stage, kind of call it Series A and Series B phases, we have sector focused teams. So we'll speak a little bit about the Industrial Innovation Fund in a second, but we have a $500 million fund focused on female entrepreneurship, which is very successful, the largest of its kind. We have another $500 million, all in Canadian currency, of course, fund that's dedicated to the climate crisis and help capture GHG emission through technology. And we just launched a sustainability fund. And we have multiple programs that are more either thematically or sector focused. So that brings us to the Industrial Innovation Fund, which operates in a very similar space than Momenta. So happy we're talking. You mentioned our friends at McRock, and BDC is also sponsored to Builders, Yaletown, and a few other franchises that are actually rather active in the space here in Canada. So no shortage of co-investment opportunity. We've also had a good track record at crowding in more generalists to the industrial space, being able to lead around and bring syndicates together. So that's something we do also. So in short, we launched in 2019, and that's the Industrial Innovation Fund yet again. It's a $250 million envelope. The fund launched when Joe Regan was hired as a managing partner to launch our effort. I was lucky team member number 2, coming over from a strategy role at BDC Capital. It was a bit of an organic transition for me, having spent the last few quarters working on the thesis and the business plan and conducting dozens and dozens of interviews with industry stakeholders to really identify the problem statement. We are one of the largest industrial focused funds globally. And just in terms of financial metrics, we are wrapping up Fund 1 as we speak with investment number 21. We've been active at the late seed stage. So, product market fit, yet modest revenue, and maybe even at the prototype stage in some instances. And we've also taken positions in later stage companies at the Series C stage with the check size ranging from 3 to 13 million. And we also are proud to report 2 exits to date in the early days of the fund. So hopefully that paints a picture for you, Ken.
It does. I heard through the rumor mill you guys are thinking about raising the next iteration of this. You want to say something about that?
We have the privilege of having a single LP structure. So that removes a lot of complexity in the context of fundraising and reporting and aligning sponsor interest. So we are presenting to the board of BDC a plan for a Fund 2. And if all goes well, we'll have announcement to report in the fall. The vision here is to continue the good work we've been doing with Fund 1 around the similar thesis targeting Series A, Series B. So stay tuned for an announcement in the fall.
Nice. Thanks for sharing that with the audience, and best of luck in getting that raised and approved. I'm sure you guys will not have a problem. So I'm curious, what does industrial innovation mean to BDC, and really kind of what attracted you to this thematic?
I'm sure you share the feeling, Ken. Industrial technologies often have a hardware component. We don't shy away from hardware software deals or purely hardware deals. And you can see them in action in the field, and you can feel the impact, and you can discuss with the operator and have a good vision and understanding of the ROI and seeing the impact of these technologies in action in the field in sectors that deeply need productivity enhancements is always highly rewarding. Beyond that, BDC operates on a dual mandate of development and financial performance. So we can feel the impact on the development side as well, tackling hard problems in sectors where many investors shy away. So all of this combined, it's a rather fulfilling mandate to execute upon. The genesis of the fund is the following, Ken. So we start by asking ourselves, in which domain would we hold a comparative advantage in Canada at building technology solutions? I don't think Canada can compete with the likes of Silicon Valley and other global tech hubs for middle of the road information technology. So, based on the work we've done, realizing that the primary sector and the secondary sector are structurally so important to the national economy, it became evident that building technologies for these legacy sectors that are often under digitalized is an area where we think we could have had success. So, based on all of that work, three kind of pillars emerge. So, we're investing in ag tech and food tech to impact the agricultural sector. Advanced manufacturing is another sector that we're quite active in. And lastly, we're also active in resource extraction, never from the perspective of being an asset owner, but always try to build solutions for the mining industry, the energy industry to be more efficient, clean up their process, have an impact on their cost curve, their recovery, and the likes. So an interesting thematic emerges here because while all of these industries face their own challenges, they do share similar priorities. And I think Momenta has published a number of fantastic white papers and taken a page of your book. We're talking here resilient supply chains, critical asset resilience, digital transformation, workplace safety, human machine interaction. So these are all priorities that, dictate the adoption of similar technology levers that can horizontally be applicable through all of these sectors. And we're talking here artificial intelligence, Internet of Things, robotic automation, digital twins. So all of these levers make for a bit of a homogeneous thematic here. So I'll stop here on how we see industrial innovation. I hope it answers the question, Ken.
Yeah, no, clearly it does. It's interesting. I've always thought about our investment thesis as one of pattern recognition, and thus we do energy, manufacturing, smart spaces, supply chain, and those are less about the actual hard sectors than they are general patterns, like smart spaces. We always say cities, buildings, farms. People go, how did you couple those together? Because the technology stacks are actually, and even the problem sets and go-to-markets in many cases are very similar, right? So you make an investment on a horizontal basis in one, it's likely applicable to the other. So I guess suffice it to say there's a strong ecosystem perspective that you can develop. And given certainly your guys' critical mass of investments, I'm sure you must do a lot of that in the work that you're doing as well.
We sure do. There is requirement for deep domain expertise in these three particular sectors where, go-to-market dynamics and adoption and maneuvering sales cycle and just the general behavior of the adoption and the stakeholder behavior varies from an industry to another. Yep. So within the team, we have folks from all of these different industries that combine with the vision of a few technologists on the team, folks like me that have a bit of a more economic view. We put all these skill set to work to bring it to a cohesive approach. So that's how we approach it, Ken.
Perfect. Well, this is going to be an unfair question. It's kind of like asking a parent which of their children is their favorite children. But I always like to know, so what have been some of your more notable investments?
So I'm here in Montreal, Quebec, and I'm exposed to the great work that the aerospace ecosystem is doing. We have a strong agricultural cluster here. Ontario and Quebec share probably 80% of the country's manufacturing capability. So structurally, I'm exposed to maybe two of our three pillars, and I've been really active in supply chain. I've been really active in ag and food, and I've also been rather active in the manufacturing space. So I say I generally cover two of our three sectors. I can speak of a few examples. We've done a company with Bayer and TELUS, a high-profile Series A last year, company based out of Montreal called Chrysalabs, and they combine spectroscopy and machine learning to produce a probe, beautiful industrial design that can be inserting into the soil. And within 30 seconds, you have a digital reading of the nutrient content across 15 dimension, nitrogen, potassium, but also organic content if you're curious about carbon of that specific soil. All of that can be consumed in the cloud or uploaded in your farm management system to create heat maps and whatnot. And that will guide agronomic recommendation. And that would also provide you fantastic logistic benefit, not having to wait a couple weeks and travel to the lab to get your results back. So I think with such a solution, growers are able to take pretty concrete action and being a lot more reactive to the health of their soil as they approach agronomic decisions. So that's an exciting one in Crystal Labs.
Yeah, clearly. It's funny. I did some work a while back with Syngenta. So we, obviously looked a lot at this space, digital agriculture primarily. And at the time, soil sensors were quite early on, formative, if you will. What you have just described there is quite revolutionary, given how quickly you can get that wide set of readings. And I could see that truly being a game changer, especially the carbon capture side of it, which you quietly inserted into that. So pretty amazing. So let me ask, what role does BDC traditionally play relative to post-deal value creation? It's what Momenta calls co-creation, if you will.
So when we lead transaction and take a large ownership stake, it is our preference to be active investors and have a presence at the board level, often through a director and observer seat. So we truly like to roll up our sleeve and help in every way, shape, or form we can. So we put our personal networks to work here. So whether it's cross-pollination through the portfolio or intros elsewhere, this is a big part of our contribution. BDC is also, as a Crown Corporation, really good at governance. And for these early stage companies that are graduating first from a seed to Series A and need to build these systems to ensure proper governance, that's something we're quite helpful as well. Financial control, go-to-market contracts. We have access to a plethora of data sources, so we share a ton of market intelligence with our portfolio companies. But beyond all of that, I think we're a very collaborative partner, whether it's with the founders or with the syndicate. We're a very stable partner. It's a big ship that is anchored in the long-term horizon. We have a reputation from supporting companies through good times and bad times. So long-term financial support through multiple rounds is something many firms claim that they do, but few firms actually fulfill when the economy takes a shift to the worse. So that's something we're very proud of being able to fulfill. As an example, we just hosted a CEO summit. I was talking about putting the networks to work and cross-pollination. So we hosted all of our 21 CEOs at an event in Toronto when we brought fantastic keynote speakers and we helped our founders brainstorm about attracting top talent, tax planning, go-to-market, and in a really peer-to-peer environment, which is very exciting for our founders because it often feels a little lonely at the top for many of them. So being able to interact with their peers and exchange best practice is something we've got great feedback. So this is one of many examples of what BDC does. And I'm focused at the fund level here. So hopefully that answers the question.
Yeah, it does. And clearly you're a good part. You're not just passive capital, I guess is the right way to say it. You are also patient capital, which is something that, as you say, is well appreciated in the ecosystem. We have at least 5 portfolio companies that call Canada home. And we've always heard great things about Canada as a founding region. So what would you say are the top reasons a company should consider founding in or operating in Canada?
Canada has long operated in the shadow of the United States, but after Israel, not long ago, Canada was the most dynamic market after the US and Israel, just in terms of investment activity as a percent of GDP. There's a few interesting markets that emerged over the last few years. Sweden, France, Switzerland, and as well as anybody can, that the European market is shaping up nicely. I think there's a lot of activity in Singapore, but nonetheless, Canada consistently ranked within the top 10 VC hubs globally. Toronto itself is home to 4,000 startups. Montreal and Vancouver rank closely behind. My colleague Tom Park wrote a piece on the topic not long ago. There's some interesting statistics that are showing growing rate of startup creation, growing rates of employment within early stage technology, a growing investor ecosystem with maturing fund and more franchises. So these are all elements that are required to have a dynamic domestic ecosystem. So I think all of these elements are emerging here in Canada. To round it up, we also have pretty attractive incentive program for R&D, strong government support. You're probably hearing it through the BDC, but through various programs, world-class university, top research, diverse talent pools, competitive wage, pretty good quality of life. So all of that make for a compelling pitch. And I don't think you need to be sold, Ken, because you've already taken a few positions as you alluded to.
Well, that and there's a general dynamic that Canada is a great place to come to North America. Ultimately, you might end up in the US, you may stay in Canada, but your immigration policy has always been more inclusive. And thus, you actually get some of the best raw talent that come in that are traditionally your startup talent, anyways. And, they may choose to stay or expand into North America. So that's a good dynamic to bet on and one that you guys should be proud of from a policy perspective as well.
We have benefited from positive brain when the US government changed a few years ago their immigration policy and the green card requirements. So we do have a really global talent pool that's flowing in. So that's a big piece of the equation. I agree.
Yeah, and given the importance of skilled labor these days in every market, that is gold at this point. So let's talk a little bit about also generally industrial AI, right? We've been investing in what we like to call industrial optimization for over a decade. But, we've really ramped up our investments around industrial AI over the last probably 18 months. We've already done 4 in this year alone, right? So what are some of the interesting use cases and companies you're seeing relative to the application of AI in your industry and in Canada?
I'd say, Ken, about half of our portfolio leverages AI as the primary technology lever or as part of their solution. So, and in recent transaction, rarely we haven't seen AI as part of the solution set. So we're seeing that acceleration within our own portfolio as well and our own investment decision making. You mentioned our friends at McRock. They host a fantastic symposium every year here in Montreal. Last year, the keynote speaker was Andrew Ng, and he explained how the first deployment of commercial AI were directed naturally at massive opportunities with relatively high value. And, we're talking ads here, web searches. And as these massive opportunities get crystallized, think about OpenAI here and that ecosystem. Well, what remains is a long tail of lower value vertical applications, single problem set, which AI is particularly well suited to tackle, but requires specific parameters. Therefore, so this creates a long tail of smaller problem set, which are all large enough to justify venture investment and building a company in the space. So I'm thinking here, food inspection, pesticide application, as soil grading, as I've already mentioned, material grading, quality insurance, and automotive. So these are all really task-specific tasks that can all benefit from AI, yet are not necessarily suited to generalized models. So we're seeing the multiplication of these vertical applications. We just made a very interesting placement in a company here out of Montreal called Maxa.ai. They were last year's winner of the Snowflake Challenge. It's an enterprise data play. Basically, they enabled data extraction of ERPs, alignment of data from multiple ERPs and multiple systems, often legacy, to be formatized, I'm inventing a word here, into single data tables and be able to consume by, company's executive as a single source of truth in a dynamic live environment, which is miles away from the spreadsheet and the workarounds that these companies have required to do in the past. So using machine learning to make data available within a company is a fantastic use case of AI, I believe.
Yeah, in fact, it's interesting when you think about the examples you talked about earlier, ads, web searches, et cetera. those are all highly digitalized, if not completely digitalized. And I think the biggest challenge you run into is not necessarily the value of the applications, but the amount of cost you have to put into instrument, something like cement kiln drying optimization, right? Or metal casting operations. But I would suggest that the upside value is equal to, or in many cases better, especially if you include sustainability, resilience, human centricity as additional measures in there. But it does take more work to get to it. And it takes deep domain knowledge, as you said earlier, right, to really do that. So I think the impact of industrial AI is still well ahead of us, and thus some of our recent investments, and sounds like some of yours as well. So let me ask, what are some of the key trends that you're following in industrial innovation, to help your own investment thesis?
Well, Canada has a massive mining practice, and technology applied to mineral extraction is really top of mind for us. And we're going to have to play a role here in the clean energy transition. And the increasing demand for critical mineral is only going to face more pressure in the coming years. So the event of machine learning to the mine site for mineral deposit discovery is something we're closely looking at, whether in combination with current geostats technique or as a net new way to assess resource, is something that we're really active in. We're already active in lithium demand and lithium extraction as a fund. So as an institution, pardon me. We're very active also in process controls. We have a company that deploys sensors for pharma bottling, food bottling, regulating flows in oil pipeline. We have a placement there out west in ambient. Bioreactor control, we've looked quite a bit at that in the context of our ag stream, always with the human in the loop. But in the future, hopefully that decision making can migrate as much as possible to the machine side. With more automation comes more cybersecurity risk. So we're always on the hunt for OT cybersecurity plays. And lastly, I think robotic automation is going to be a big part of our thesis for Fund 2. We're investor in a company out of Toronto, Ontario called Skygauge Robotics. And they've built a drone with a unique design that offers 2 degrees of freedom to each gimbal in the drone, which allow the centerpiece of the drone to stay stable. And this is critical if you want to do work at height. A traditional drone design will move the object by tilting forward, right, or left. And in order to interact with the surface, it literally needs to crash into it, which prevents, for example, their first use cases in ultrasonic testing. So this company has built the tool. It's in the market. We're working with them to make it as intelligent as possible. So it requires less training, less human operation, and it's repeatable over time. And the parameters are sharply tuned in order to automate most of that work. So that step into the software and machine learning journey to make these robotic tools as autonomous as we can possibly make them, I think is going to be repeated across all of our assessment of robotic opportunities. Maybe one last example, we're invested in a company that's called 4Ag out of British Columbia, and they're striving to fully automate mushroom picking in indoor farms. So that's another use case where labor shortages are really creating hardships for operators where we think robotic can solve.
Those are all great investment thematic areas, and we certainly have placed bets in several of those areas as well. So as we wrap up, I'm curious how you maintain your edge as a leader. Any recommendations you want to highlight for the audience?
On the topic of investments, I like a number of podcasts, Invest Like the Best, How to Build This, great founder stories. I also really like Acquired. Ben Gilbert and David Rosenthal are fantastic storytellers. They don't shy away from deep dives on the world's greatest company. On a recent flight, I powered through a 4-hour episode on Microsoft. I did not know that Bill Gates' father was such an influential attorney in the Seattle area and was critical in drafting the contract that kind of set the foundation for the software as a service model as we know today. There was no precedent for distributing software as a license before that, and it was not protected by intellectual property. So Microsoft had to blaze the way through that. So these are the kind of stories that I find quite interesting. I read a lot on psychology, neuroplasticity. Kahneman is a must read, Thinking Fast and Slow, to understand the mechanics of the thought process. I can go on and on, but I also read quite a bit on economy, and I like to read the latest publication of the Nobel Prize winners, Kahneman, Stiglitz, so Piketty, of course. So not the most relaxing read, but really engaging. So I'll stop here, Ken.
Yeah, I'm glad you did because that's a very extensive list and a bit eclectic, which I really like in that regard. So we will include links to at least all of the books that are in here in the notes associated with this podcast. So Alexandre, thank you for taking this time and sharing these insights with us today.
It was a pleasure to join you, Ken. Best of luck with future episodes. And I truly hope to see Momenta and yourself in the market on a co-investment opportunity in the short run.
We'd certainly love that. And we like having you guys in the market and certainly in the space. So this has been Alexandre Préfontaine, Principal Industrial Innovation Venture Fund at BDC. Thank you for listening, and please join us for the next episode of our Industrial Impact Podcast. We wish you an impactful day. You've been listening to the Momenta Digital Thread podcast series. We hope you've enjoyed the discussion, and as always, we welcome your comments and suggestions. Please check our website at momenta.one for archive versions of podcasts, as well as resources to help with your digital industry journey. Thank you for listening.